So the Federal Reserve is not done raising interest rates, but they're close. And there's a big lag from when the Federal Reserve does their thing of raising interest rates repeatedly and when the impact really hits the economy. But the Federal Reserve got a booster shot from those bank failures that happened a few months ago of some very large banks, what I call super regionals. Nobody seems to use that term anymore, but that's what I call them. And so lending has really tightened up at pretty much across the banking sector after the small number of bank failures that happened earlier this year. And so people who are business owners, entrepreneurs, trying to expand a small or medium-sized business are finding that the banks are being much more difficult to deal with to borrow money or borrow money on favorable terms. The collateral required may be higher, or it just may be too hard to get that loan. And so this is part of the process of trying to put the economy into a lower gear. And the Federal Reserve, along with central banks around the world that overdid their job during COVID and pushed too much money into individual economies and collectively around the world, they're all in a reversal that odds are very, very strong that we're going to have a recession late this year or sometime first half of 24. And the recession, because our memory of our last serious recession was the Great Recession. And for many people who came of age leading into the time of the Great Recession, it's all you really know is the brutal harm that occurred to people from the banking scandals starting in 2007 that we really didn't get to healing till 2015. 8 years, massive unemployment, massive waves of foreclosures, repossessions. It was awful. And so for many people, that's what a recession means, because that's the only one you've really experienced in your life. There was a technical recession very early in COVID when we had the tens of millions of people suddenly laid off, and then just as quickly jobs became available again. So that one I skip as not even counting. But this recession, barring Putin flying nukes in the air or something like that, this recession is going to be extremely mild by historical measures. And recessions, a very large number of recessions, are very mild. What happens in a mild recession? Unemployment ticks up a little bit. A lot of businesses find it harder to sell discretionary goods, things we don't have to have. Business owners' profits decline, not normally precipitously, but they do decline. And so a recession in capitalism is a normal part of a free market, and it usually makes an economy stronger in its next phase, because what a recession does is it clears out excesses in an economy. What's our excess? Our excess has been inflation. And the moves that the Federal Reserve has made, plus supply chains restoring, has led to inflation declining, but we're not out of the woods yet with inflation. Inflation is way down from where it was, but we're not back to where a truly healthy economy would be, which is an inflation rate in the 2s. Right now we're running in the 4s, approximately. So, and remember, we were not that long ago, last year, we were approaching 10% inflation. So that's going the right way. But it does mean to get to where we need to be, which is the lower historical goal for inflation of around 2% plus or minus, there's going to be some hurt to some people, to some businesses, and some sectors of the economy, but nothing brutal. On the positive side of the ledger, you're going to see mortgage rates decline. Now, as I've said on many prior occasions, they're not going back to 2% because that was a manipulation of interest rates by the Federal Reserve. That's not happening again. So interest rates will be lower than they are now. Dare I say, will end up somewhere probably in the upper 4% range. And that will make house payments much more affordable and will be really a positive for the housing market. So this is a recession that, as you rank them, I mean, nobody wants a recession unless you're a pointy-headed economist. But of recessions, this one will be pretty benign and nothing terrible. Key reason, we're starting from an ultra low unemployment rate right now. And even if it bumps up some, it will still be a very favorable overall market for job holders and job seekers. Krista?
So we had a couple.
I forgot.
Oh, go ahead.
I said, what does all this mean to you?
Oh, yeah.
There are going to be some people who do lose jobs. So your job this year, as we head towards a likely but not certain recession, is to reduce your debts and build up your savings. Anytime there are warning signs that the economy is going to head the wrong direction for your wallet, it means that you're getting an early signal that you need to reduce your overall spending, if possible, to have more control of your finances if something unexpected does happen in your work life or your personal life, that you have reduced any debt, eliminate credit card debts if you can, and build up that cushion. Sorry, I forgot to. That was the whole point of all that, and I forgot to say it.
That's okay.